Welcome to our weekly Forex and Futures forecast. My name is Jay Norris, and I'm a trading instructor at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for everybody. First market we're going to take a look at will be the Australian US dollar. Aussie US dollar. Weaker later in the week in sympathy with that strong dollar and sympathy with a weaker euro. We see support just above 85 here. That's a 50% retracement from the 09 low. So overall, we see support just below in this market. You can start to see with the naked eye the volatility is coming out of this market too. Even in here you had smaller ranges. We think you'll continue to see smaller ranges. It's a market where, as it grinds lower, the volatility will come out of that market, and that's not a bad market for short-term trading. For day trading, less risk, less volatility, less risk. So as an intraday trader, you can trade a little bigger in there. Next market would be the dollar index. We really like this market on the upside. A lot of support down below. That support held. We talked about this last week, like that little pin doji, and I said that's a bullish development despite that big sell-off. We call that a reset. Just prior to get everyone on one side of the boat, the majority of the opinion of professionals is that you have to be long a market. That's when you get a reset. They kind of pull the rug out from everybody. Guess what? Anyone who had stops below that 80.5, they got cleaned out. So you clean out the stops. That gives your primary dealers, that gives your bigger market makers an opportunity to swing long, so they're in a position to make a market as that market breaks out. So that's important for them, and that's important to know as a trader also. We think when they take out this level, it's going to be big. For scale here, let's go out to a weekly chart. Even here, you have to scrunch it all the way up. Give you scale, see where that market's coming from. There you go. 10 years ago, that market was all the way up at 120. Now it's all the way down here, just above 80. That's a lot of room up above. So very bullish chart from our perspective. We're pretty bulled up on the U.S. dollar. We're looking for that breakout at 81.5. We don't think 81.5 will hold this time. When 81.5 goes, we think there's plenty of upside. A lot of things to be excited about in the government. Well, I should say a lot of things to be less concerned about in the U.S. government in particular and the U.S. economy than there was. And really that's that. Trading currencies in particular, it's all relative, and that's what it is. The U.S., a lot less problems on the horizon than there were, even 6 months ago. So next market we'll take a look at is the dollar Swiss. Dollar Swiss, similar to dollar index. We're pretty bulled up on this market too. This was a bullish development. We talked about this last week. That level held. We saw that as a nice formation. Here, a little bit lagging here. You can see you have a little bit of a sticking point right there. What is that, 90 3/4? But we think you get above 90, you clear 90 3/4, you'll make a run above 91, and that's going to be it. Here's another market where we're excited about a breakout, a longer term breakout. Let's take a look at the weekly and get scale on this guy. A lot of room up above here. So you break out, and conceivably you're looking at 105, 110 potentially. So that's really exciting. So we're really excited about the U.S. dollar here, the prospects for the dollar on the upside. Particularly now after they reset it. Here you see this big down move right there, big sell-off. Anyone who was long all the way, suppose you got long here, you were feeling pretty good. You got long below 90, you were feeling pretty good here when you were breaking out above 91, right? Guess what though? If you had a break-even stop, guess what happened to you? You got taken out of that trade. You even had a loser. So I feel much more comfortable being long this market now that they reset it, now that they pulled the rug out. Basically everyone, as I said, they all get leaned into one side of the boat. Even the professionals, the majority of professionals are bullish on a market. It's really close to breaking out. Boom, they pull the rug. They sweep those stops out of there. Again, that gives the market makers, that gives your big primary dealers opportunity to swing around long there. They may have been getting a little too short as the majority of people were getting long here. You got to reverse that. Then they're in a position to be able to make a market into a budding bull market here. So let's see what happens there. Next market we're going to take a look at is the euro. I'm loving the euro. I happen to be short it. Beautiful opportunity to have gotten short into that zone. We talked about this. I said this is a bearish formation. Loved it after you got the reset here. Loved that big rally. You took out anyone who had a stop above 137. Boom, you took their money. they get stopped out. That was an opportunity to get short there. You can add to that realistically on the new low now. So I liked selling rallies last week. I love selling rallies now. Very interesting development on the monthly chart here also. This is what we call a monthly change of direction. See how, let me get rid of that. You see how we closed below the low of the highest closing candle. My lines are in the way here. Right there. See how we closed below the low of the highest closing candle. This is your highest closing candle. That's significant. That's really significant because the market's very strong. Anytime you have a new high close, that's a strong market. So when you close below the low of a high close right there, which we did for the month, you get a change of direction. Basically, when you close below the low of the highest closing candle, something has changed in the market. I can guarantee it. When you take out that level, something's changed. That's why we call this a change of direction. So change of direction on the monthly chart in the euro. We're pretty excited about that. We're pretty beared up on this market. And you can see you have lower lows. So we think the cat's out of the bag in the euro. We think it's big to get that weekly close below 135. Very pleased about that. So looking good shorts in the euro. Next market. Take a look at the gold market. I was kind of hemming and hawing on gold last week. You look back the last couple of reports we've done, I wasn't sure what to make of that because it was going up as the dollar was going up. It was going up as the dollar was going down. I was a little bit concerned. But you know what? Boom. It hit the 50% retracement of this down move. That high, the October high to the most recent low. You hit the 50%, turned around. Things are making a lot more sense to me now. Commodities are always tricky. I like the currencies. But you know what? When they all coalesce, when they all come together, when those waves come together and you see confluence, that's when you get the big moves. Prior to this, the waves were kind of offsetting each other, right? You had the gold going up and the dollar going up, and you're a little bit confused. That's going to offset. But as everything rolls into line here, as the dollar strengthens, we would technically, historically expect gold to weaken. You never know about a commodity. They're tricky. But as I said, it's starting to make a little bit more sense to me now that you'd see weakness. And I said a while back, I said last month, here's my weekly gold. I don't think you get you get a whole lot of upside in the gold until you pop the stops below here, until you reset this guy and see what's below 1200. So you may see him below those stops, and then I think you take a look at gold on the upside. But you have a double bottom in. I'm a currency guy, though. Let's take a look at the U.S. stock market. This is a pretty significant shift we saw in the market. Let me go down to a daily chart. Definitely we'd be playing as a shorter-term trader, day trader. You could be on the short side now in the stock market. You can see it's barely hanging out of that 50-day pattern line, that RTT level. So we think you have a little bit more downside here. This is dollar bullish too if you have a stock market correction, and many folks will say you're overdue for one. I'm not going to argue with them. Kind of silly to argue about market movement, right? It's going to do what it's going to do. So U.S. stock market, I think you could probably you look at playing both sides now. You're clear to trade the short side intraday. As an investor, it's they didn't design this thing to go down long. I think you're in a spot in the economy where it's more corrective price action than a potential long-term top, and it's in everyone's interest. Well, it's definitely in the executive branch. Is definitely in to the benefit of the Fed, to the benefit of really everyone in government and business, that they keep the stock market propped up. So keep that in mind. The powers that be, the Fed, they're more powerful than they've ever been, and it's in their best interest that they come in and support this market if it got ugly. So keep that in mind. You have the old plunge protection team out there, and they're probably not going to mind too much a little healthy correction here. And I think that's what we're in right now in the stock market. Hey, let's go to my favorite little play here, accumulating corn on the dip. Here's corn. This is a cool market. It's an energy play too. People have to eat. Cows and pigs have to eat. We love corn here in Illinois. We're on the edge of Chicago here, corn country for sure. Beans too. We like beans, but we like corn. I think you can dollar cost average corn. I said that on the approach to $4 and hope it goes lower, because at some point, with the spring not that far around the corner, spring and summer coming, you'll get a weather scare, so you'll get an uptick, you'll get an upthrust in corn. But I'm not just playing it for that. I like it long term. So honestly, I hope corn grinds lower still so we can accumulate more. I say you dollar cost average that. Put it in your IRA. Dollar cost average the not necessarily the future, the ETF, the exchange traded fund, CORN. Here it is. I think that's worth taking a look at too longer term. So yeah, start to take a look at that. So we like corn long term. Here's the crude oil market. And I said last week sideways. That was the case, right? I would have liked to have seen it come off harder. We talked about this last week. We had a couple of 4-hour closes higher in here, so that told me this market was stronger than some folks were thinking. And boom, now it made a higher high of the move. That doesn't surprise me. What did I say last week? I think sideways between 100 on the upside and down here 92 on the downside. I'd like to be more bared up on this market, but it is what it is. I think you just had too many speculators trying to work the short side, and that was the case. So I think historically 100 would be a good sale. But it's a commodity. You have to be very, very careful. There's a reason why we put disclaimers on this stuff, because it's true. Trading is risky business. I like the currencies. I definitely like the currencies compared to some of these commodities. But if you know what you're doing, obviously, it's a two-edged sword. Of course, it can work for you. It can work against you. Last market we're going to cover is the 10-year note market. Very interesting. You have a bid in the 10-year note now because you've got overall stock market weakness. Definitely weakness in emerging markets. Some of these countries you have outright currency panics. That's putting a big bid in the 10-year note. Here's what's most interesting about the 10-year note. I said all along you're not necessarily going to get that big dollar rally with the 10-year strengthening. However, you have a nice bottom in the dollar. You have a nice top in the euro. You're just starting to get in the meat in the middle. But what's going to be the fuel for the dollar rally? The fuel for euro weakness into this year is when this market does top. Okay, keep in mind this is the 10-year note. As it goes up, interest rates go down. As it goes down, interest rates go up. So this is a bear market. You scrunch it up, and you clearly have a pattern of lower highs and lower lows. Although, albeit you held a long-term trend line. However, when this guy does roll over, and that's what markets do, they do roll over, and I think things are going pretty good again in the U.S. relative to around the globe, that things will stabilize in the U.S. and come springtime things will be looking pretty good actually. And I think when the 10s do roll lower here, when they roll south, it's going to be a big dry log on that dollar rally fire. So we like that long term. So hey, love the dollar, love the U.S. dollar. We're pretty bulled up there. My name is Jay Norris. I'm an instructor at Trading University. Thank you so much, and we'll see you next week.